Hey Sherina,
Hi,
are you able to see me?
I do see you. Yes.
All right. All right, we can start now. So, hey everyone, we are on live, Facebook Live, as well as we are just recording on Zoom. So, if anything, we'll post this video on later on Facebook as well. So, good evening and welcome everyone in our another episodes of one-to-one discussion. And my name is Atahar, as you know, and I'm a real estate agent working for Keller Williams Atlanta. So today's topic is about one of the most important factor for home ownership is mortgage loan. So whether you are in first time home buyer or investor, so today's discussion might help you to get better idea how a mortgage loan works and so on. So without further ado, let's introduce our guest. Her name is Sherina Pate. She's a renowned expert in the field of mortgage loan. Sherina Pate has a mortgage lender with Supreme Lending, and she has been helping people to achieve their dream home ownership for a number of years. So let's welcome to our guest, Sherina Pate. Hi, Sherina.
Hi, how are
Uh,
you?
I'm good.
Thank
How are
you for
you?
having me.
Sure. Thank you. So can you please introduce yourself and what do you do as a mortgage lender, please?
Sure. Well, as you said, I've been in the mortgage business for quite a while. I have 24 years of experience. I've seen all markets up and down, rates up and down, prices up and down. I'm a mother, wife. I have three boys, and I am the in-house lender for Keller Williams Realty. And so, yeah, I work for a company called Supreme Lending. I've been with them now for about 7 years.
Wow.
So quite a long time. I really love working with Supreme. It's a company that I feel, best matches me in terms of, the brand I want to represent, the service I want to provide to my clients, and the experience that I want. So, yeah, that's a little bit about me.
Thank you, Sharina. Thank you so much. So today I would like to, I have gonna ask you so many questions. So first question I want to ask you, that what type of mortgage do you offer, and what are the key features of each option? And the question related to this, what is the minimum down payment required for a conventional loan? And are there any options available for lower down payments? Such as FHA or PA loans, please?
Yeah, I can talk for the entire video on all of that. So I'll try to summarize pretty quickly. There's the right loan for every person, and the same loan is not right for every person.
Right.
We do offer conventional FHA, VA, which is for our veterans, the VA benefit, which is 100% financing, no PMI. PMI is private mortgage insurance. So the benefit of being a veteran is you don't have to pay that, and you can get 100% loan. We offer down payment assistance programs that will offer 100% financing on FHA loans as well. And we offer jumbo programs, which are going to be your loans that are over the conforming loan limit. So they're going to be 750 plus type loans. And we offer your basic USDA financing, which is rural financing for people who might be looking in rural communities. That is 100% loan as well, that is available on specific homes. Interest rate, down payment, those kind of things, those are variables, and it will be based on the customer's profile. But the minimum down payment required is either 100% financing, or on an FHA loan, it's 3.5%. And on conventional, as a first-time home buyer, 3% down.
All right. Okay. Sounds good. Thank you so much for information. So what is the current interest rate today? And can you please tell us what's the different mortgage products do you have as well?
So current interest rate, again, that's a variable. Sometimes people, call and just say, what's your rate today? That
Right.
question can't really be answered without knowing more about the customer, the property, the program, the down payment, the credit score. So about 7 different things are factored into an interest rate. So depending on if you're putting 3% down or you're putting 20% down, the rate is going to change. If your credit score is 620 or your credit score is 800, that rate is going to be different, for that buyer. If you are using FHA financing versus conventional versus VA versus USDA, again, rates all will change. And we really need to know a little more information on the customer. If you're buying a condo, the interest rate changes, based on the risk of the property, the risk of the buyer, the risk of the loan program. All of those things are factors. So rates, that's a loaded question. They're going to range anywhere between 6.5 upwards of 7.5, depending on the program that you're using. Sometimes our down payment assistance programs can be almost a percentage point higher than a traditional loan, but that's because you're not putting your own money down, which makes the loan risk a little higher. And my saying is always that risk equals rate. So the higher the risk, the higher the rate. If you're buying a second home or you're buying investment property, those are going to be higher risk loans than your primary home, because if you get in a little trouble, you're going to let that home go over your first home that you live in. So that's a higher risk to an investor to give you that money. And so therefore the rate is higher. So rate is, relevant to what transaction we're trying to make happen.
Right. So I know, during our conversation with our clients, always they ask us like, what is the interest rate and why it is so high? Can you please explain us, like, so we have a certain answer, but I want to hear from you that, what would be your answer, like when people asking like why interest is so high, what are you gonna say about it?
Well, interest rates really are what control our economy.
Yeah.
And depending on what's going on in our world, and we just went through a really big pandemic that impacted the entire, world. So that's an anomaly. And during that time, people were, losing jobs. Companies were having to close their doors because you couldn't be in large groups. So we saw interest rates coming down to stimulate the economy, to try to get people purchasing and spending money and getting out the house and doing that kind of thing. So people always compare rates to that one period, but that is like a once in a lifetime occurrence for rates to have dropped as low as they did in the 2 and 3% range. Right now, we're in, a period where our government is trying to control inflation. And we've all experienced that inflation when we go and just try to buy bananas, or buy, tomatoes and, normal day-to-day items now are costing more and more. And that is due to inflation. And the only way to cure that is to increase rates and slow down demand, to slow down purchasing. A lot of people tell me, hey, Sherina, I'm just going to wait for the rates to drop because they're too high. Well, we just experienced what that feels like, right? When the rates were low, there were so many people, demand was very, very high. And what did that do? It drove prices up and up and up and up. And so that is what we're trying to bring back down, get things in control. And to do that, you have to raise rates. It's just a part of our economy. It's the way things work. And like it or not, many of us are probably thankful for that because it is keeping costs down on other items.
Yeah, that's right, Sherina. Sherina, I would like to ask you another thing. So many first-time homebuyer was asking me about, are there any specific mortgage programs or grants available for first-time homebuyers, or specific group of borrowers in our state of Georgia, such as down payment assistance or special loan?
Yes. Several of them. There are programs that maybe all lenders may offer that are statewide or multi-statewide. Then there are some programs that might be specific to counties, that you're purchasing in. And then there are programs that help nurses, our caregivers, firemen, policemen, first responders, that are catered just to a specific individual or class of people. And so there's a lot of programs out there. No lender offers all programs, but there are many that can cater to most people that need down payment assistance. We internally, we offer a program that is called Shanoa, and we also offer a program in-house called Supreme Dream. Both are 100% FHA. One has an income limitation and one doesn't. One requires you to be a first-time home buyer, the other does not. So again, depending on the customer profile will determine which program we might look at for them if they're looking for down payment assistance. If they're a nurse, there's the Georgia Dream program, which gives you $12,500 towards your closing costs. And your down payment. And so we might look at that option if we have a first responder or a caregiver or someone that works, in the school system, a teacher, that might be an option for them as well. DeKalb has programs, Cobb has programs. Some of them, have been put on hold since COVID, but, just definitely do your research if you're a buyer out there and see what programs are out there. And remember, risk equals rate. So if you are looking for those assistance program, you are looking to get a little higher interest rate than you would normally get. But if that's what you need to become a homeowner, then that is the way to enter the housing market. And it's a great way to do it.
Right. Yeah, thank you very much, Sherina. Yeah, it was very helpful. I hope, whoever looking for first-time home buyer and are trying to get, some assistance program, of course, it might help them to, of course, I also like now suggest them reach out to Sherina or, they will definitely help you about that. Sherina, so next question I would like to ask you that, can you just explain that, you already touched before there about like mortgage insurance and whether they are mandatory for certain loans?
Oh, I'm sorry, say it one more time for me.
Yeah, so the different type of mortgage insurance and what they are, whether they are mandatory or for certain loans. I'm talking
Sure.
about
So mortgage insurance, for those that may not know it, or you hear it referenced as PMI, which means private mortgage insurance. So that is insurance like homeowners insurance. It insures the lender in a situation where the buyer defaults on the mortgage. So if you were to buy a home and you can't make your payment and you stop making the payment, this mortgage insurance kicks in to try to cure the lender for the amount of money they gave you to buy your home, right? So it's like, paying damages like insurance does on a house. So no different than a car insurance, same thing. So if you are not putting 20% down on the loan on conventional, you have to pay private mortgage insurance. And you only pay that until you have 20% equity in your home. So when you feel that your loan amount is only 80% or less of what the home is valued at, you can start to talk about dropping the PMI off of the payment. But until then, you must pay that insurance so that if you default, the lender is covered for that debt.
Right.
On FHA, it's a little different because FHA requires mortgage insurance all the time. And you can't really drop that mortgage insurance until after 11 years. So it has some different rules around mortgage insurance. FHA is a little more lenient on credit scores. It's a more lenient on down payment. And so again, higher risk loan. So the mortgage insurance is in place a little longer than it would be on a conventional loan. So that's really what mortgage insurance is about. It's just insuring against the default of a loan. And you are required to pay that if you are not coming in and saying, I'm going to guarantee and self-insure with 20% down payment. So that way, if I don't pay, you've got 20% equity in the home, you sell it, you're still made whole again.
Right.
That's the situation where you may not be required to pay PMI.
Thank you so much, Sherina. Yeah. So it really help our clients, especially in whoever's watching our in Facebook Live, as well as later they will watch in Facebook, YouTube, and all the my clients, and of course my viewers. So next thing I would like to ask you, what are the qualification or criteria for obtaining a mortgage, including credit score or and income requirements?
Okay. Minimum credit score is 580 for Supreme. And so at 580, you can pre-qualify for an FHA loan. For conventional, the minimum credit score is a 620. And for VA, it's also a 620. Okay. USDA is going to be a 640 credit score. And the Georgia Dream program I mentioned for teachers, doctors, nurses, that's going to be a 640 credit score as well. Income requirements, that is, again, a question that is based on each person. So if you're looking to purchase $100,000 house, that income requirement is going to look different from if you're purchasing a $500,000 house. Based on your debt, if you don't have any debt, you may not need as much income as a person that has a car note, student loans, credit cards. They need more income because they're going to have to carry that debt in what we call our debt to income ratios. Every loan has a limit on how much you can have in total debt, and that be a loan that we feel is a good risk. So it will be based on income, and it's also based on debts. So I can't give like a good number for income. It just depends on the buyer's needs and the buyer's scenario, what would be, better for them.
Right. Thank you very much, Sherina.
And sometimes you can cure that, not just with income, you can cure it by paying down debt, paying off debt. So, you might make this amount and you don't qualify for what you want. Well, it might be us working on getting the credit cards paid down, or maybe getting the car paid down or something like that, because income is a little hard to change, right? But debt is a little easier to manipulate.
Exactly. Right. So, Sherina, related to this question, I would like just opposite question is like, what is the obstacles or challenges that borrower commonly face during the mortgage process, and how do you address those problems?
What's the major problem that they address?
Yeah.
The major problem I see in the process is typically money, finances, being prepared for all the costs that come with the purchase of a home. Most people just think down payment. Oh, if I'm getting 100% loan, I don't need any money. You still need money. You need money for inspection. You need money for appraisal. You need money for the lender paid closing costs. You need money for the attorney's closing costs. You need money to pay your homeowner's insurance policy. You need money to pay your taxes, things like that. So a lot of times I think the main thing I run into is people's expectations is that they don't need a lot of money, especially if they're using assistance programs, but you still need to cover all the other expenses outside of a down payment. And those expenses can amount to upwards of 5% total that you should be prepared to pay out of pocket, so that you can get the deal consummated fully. So I think that is my biggest challenge is money, finances, gifts, the gift donor, making sure we can get the documentation needed. If someone is giving you money, there is a process. Every lender has a process that they're going to go through to ensure that that person has the ability to give the money. Where did the money come from? And sometimes the donor doesn't want to tell us or show us, and then we have a problem and we can't use it. So that's my number one, I think, roadblock that I run into on loans.
Thanks, Sherina. It was very nice explanation. Thank you. So, Sherina, we don't have that much time. We have like a couple of minutes more. So, I would like to ask you another question that, how long does it typically take for mortgage application and receive and final loan decision? Yep.
Okay, so there's a couple of different processes you will hear the terminology of pre-qualification and pre-approval. So pre-qualification takes minutes, literally about 10 to 15 minutes. We're going to get your preliminary information on income, assets, credit, liabilities, what type of property you want to buy, what type of loan you want, how much you have to put down, ask you so those questions. And in minutes, we can run it and say you have an approval. That is a pre-qualification. Then we ask you for your documents, whatever they are, you know, whatever is required based on your scenario. If you're employed W-2 or self-employed, those documents may change. However, it's typically W-2s, pay stubs, bank statements, tax returns if you're self-employed. We get those documents, we send it through underwriting. So a person, a physical person now looks at that and says, okay, everything matches what was entered and we concur, you are approved. That is called a pre-approval. So you go from pre-qualification to pre-approval by providing your documents. That takes about 3 to 4 days. So minutes for pre-qualification, a few days for pre-approval. Pre-approval, definitely more powerful, stronger for your offers. You can come out knowing you have the loan. You don't have to worry anymore about that part. And now it's just finding the perfect home. The seller sees that you've taken that extra step and you're a more serious buyer than the next buyer that just got pre-qualified. So your offer looks more attractive. You look more, you know, prepared to actually close on the home. So a lot of times you can win by having that pre-approval done a few days versus just trying to go out and shop in minutes. And then lastly, once you're under contract, the quickest we can close is 8 to 10 days. So it doesn't take long at all. It's literally ordering an appraisal, sending them through underwriting one more time with the contract, getting updated documents if needed, and getting the title on the property back from the attorney. So at Supreme, you know, we're known for our speed. We're known for closing quickly. We're known for closing on time, 99% of the time. We have a guarantee where if we lose your earnest money, we'll give it back to you up to $5,000. And we're the only lender that does that because we have a really, really great process and we get you to the table quickly.
Thank you so much, Sherina. So much appreciate it. It was so many good information, and you know, it will really help our client and especially the viewers, you know, whoever watching us. Definitely. I mean, I'll recommend them to, you know, reach out to you guys, you know, Supreme Lending, if you have any question related to mortgage loan. So last question I have, like, do you do commercial loan as well?
We do not do commercial lending,
Right.
just residential.
Just residential. Okay.
And only in your personal name, so nothing in an LLC. Although we do offer investment loans, they must be in your name. You can buy investment properties in your name. And just so you know, I mean, for me, the 24 years I've been in this business, majority of my clients have been first-time home buyers, you know, or perhaps second-time home buyers, so still relatively new. And my whole philosophy is to educate. So I am so thankful you gave me an opportunity to just share a little information that's to help someone feel comfortable making that move, because America's wealth, 85% of America's wealth is based in real estate, and the everyday person can build wealth through real estate. So I'm happy, and I'm definitely, you're doing a great job just educating the community and disseminating fears that people have about this process. It's easy, it's simple. You're paying a housing payment somewhere. So getting them to the point where they're building wealth for their own family is awesome. And you're right in alignment with what I believe in. So I'm in love with it. Thank you for having me.
Thank you so much, Sherina. Yeah, that's all my intention. I would like to, you know, people should educate themselves. You know, it doesn't matter you go with me or Sherina, doesn't matter. At least ask question in any professional. So educate yourself, you know, to make any decision before. So that's my all intention to actually.
That's it. Most fear comes from not knowing, not being educated, right? And once you know, that fear goes to the side.
Yeah, that's right, Sherina. Thank you so much, Sherina. And
you're welcome.
And I would like to thank you one more time and to, you know, give me your special time with me. And thank you very much. And have a great day.
My pleasure. Bye-bye.
Bye-bye.